Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. I'm Phil Carroll.
And I'm Kevin Horsby.
Sunday the 8th of September, season 9 of the Roast, and truly autumnal feel out there. Days getting shorter and it feels like the fall. How's life treating you, Kev?
Yeah, it was terrible. The days are getting shorter. I had to get out the Mediterranean last night at 7:45 instead of 8 o'clock. It was terrible.
And was it dark?
No, it was going dark.
Yeah.
It goes dark around 8 o'clock at the latest here, but the days get a little bit shorter.
Days are getting shorter for sure.
No, it's still very beautiful here. Fortunately, by the time you listen to this, I'll be back in Cairo, so for a week or two, and then I'll be back here again. So, but it's good. It's funny though. You can be in paradise if you like, in a nice situation and good, and still not feeling great in your mind. And I realized that during August, when I looked up my steps, I actually probably hadn't moved for the whole of August.
If you get out of routine, you're not near a gym or you're not into, you know what I mean? When you're at home, you're in that routine. When you're away from home, even though it's, your place, you still get into bad habits, don't you? Getting up late and just sitting by the pool or whatever. So I think it'll be good to get you back into some sort of routine. And I guess that's what happens, isn't it? Beginning of September, we're back into the swing. Schools have gone back, of course, back on the school runs in the morning. Kids away now. But let's have a look at some of the news stories which have dominated. I mean, it has literally been, we alluded to it last week, but it's been Oasis mania still, and this whole dynamic pricing fiasco, which Ticketmaster says it's obviously going to look into. On Wednesday, Oasis, as you said, added 2 more Wembley dates to their tour, but said there will be a staggered invitation-only ballot. So, what do you make of this whole... Tickets were always going to be expensive, but this whole dynamic pricing where standard tickets initially were priced around £150, surged to as high as £355 due to demand. And apparently there's an algorithm on the system, a bit like when you're searching for flights during busy seasons and travel and during school sort of half terms, they go up. As soon as there's a high demand, they bang the prices up. Is it fair?
Well, the question is not, is it fair? They have become ticket touts themselves.
Yeah.
It's nothing other than ticket tout. If you have a price and this is what you want to sell your ticket at, or whatever it is, your commodity or whatever, this is the price. And we go through Ticketmaster and you pay then an arrangement fee as well, whatever, so they make a profit. But is it Ticketmaster making a load more money, or is it Oasis effectively taking a portion of that, Ticketmaster making a load more? I don't know. But what I will say is, how many billions, if not possibly tens of millions, 20, 30, 40, 50, 100 million pounds was sucked out of the economy last weekend?
Yeah. No,
how much? How many?
I don't know the numbers, but I did some looking into touting, and it said that 90% of the tickets on these resale platforms are listed by traders or touts who sell over 100 tickets each annually. So you can work out the maths if there's profit on each one of those 100 tickets. And the UK secondary ticket market was estimated at more than £1 billion per year in 2017, and then half of that coming from the music events. And this secondary ticketing apparently causes significant, obviously, financial damage, which diverts millions of pounds from the music industry away from the artists into the hands of the touts and the platforms. And obviously that people then spend less on, music, vinyl, whatever, merchandise, and any future shows. So there is actions from, I think they call the CMA, the Competition and Markets Authority, who are really trying to clamp down. But I think you're right. I think Ticketmaster are actually becoming touts when they're involved in this dynamic pricing fiasco.
Yeah, because it's not the same as a flight, because a flight has an infinite amount. And if there is big demand for something, then fine, you can increase the price, because you are traveling on a certain day at a certain time and you want that. Yeah. But this is an organized event that is a one-off, and this is what's happening. Because you can choose, if you were flying EasyJet, to not fly on that flight and still get to your destination, but go at a different time, and it's much cheaper. So not the same argument. It just isn't the same argument at all when you're talking about something that is finite and you can't choose to not go at that time or that place. So, yeah, I think basically We were joking when they first announced it, weren't they, that we should buy some Stone Island shares. And we realised that Stone Island was owned by some French group, wasn't it? And then this week it's announced as well that Liam's been, or is it no? No,
Yeah,
Liam.
no, Liam's been selected as a sort of ambassador for the company. But I mean,
As the
they don't
ambassador
need
for
to. He's
Stone
been
Island.
wearing it for the last 25 years anyway at his gigs and all, so he's a
Get
walking
your patch on, lad.
Get the badge in, lad. Get the badge in. So, I mean, the other thing that's been causing a bit of a furore is the whole winter fuel allowance removal. That's been building up. Labour saying that there's 1.6 billion is going to the pensioners in need will crash the economy. But yeah, I mean, I was looking at some of these numbers. They're giving 3 billion aid to Ukraine. I mean, well, will that not crash the economy? And then 8.6 billion on this GB Energy, which is this Labour initiative to make renewable energy under a kind of national-owned entity. And then there's 11.6 billion on African climate aid, which helps farmers over there. But where are our priorities if we can't help our own? I really don't understand this.
Yeah, no comment. I don't really have a comment. I think that the finances of governments are they'll spend on what they want to spend on and spend not when they won't spend on stuff. A lot of the stuff that you mentioned is probably already budgeted.
Yeah, it's already under conservative.
So it's very difficult to compare. Anyway. It's almost like saying, well, I'm not going to play my mobile phone this month because I'll do this instead when, damn right, you've already committed and you're in a contract and you have to pay it. So it's not as simple as that, but that's what playing politics is all about, isn't it, I suppose? Yeah, the government, the positive thing that I see from Labour is that they actually want to spend less. But the talk of all the things that bring it in, such as basically capital gains tax going up to equal income tax, probably 50% income tax is coming in, and maybe 50% capital gains tax. There's been studies that proved, I was actually speaking to somebody during the week, that capital gains tax above 23% is actually a net. The net result is that you get less in capital gains tax because people either hold their assets or they move offshore or they find a way to do it another way. So you have to keep it in such a way that you are going to get the income or the tax revenue. And I think they're going to find that they will lose taxation if they end up doing this. A number of people I've spoken to who never would leave the UK, but are now thinking, really have to consider this because I'm not working for like 40% of what I earn. It doesn't make any sense.
And that's until Labour potentially remove the non-dom status thing, because which could happen as well. So that's been touted. I mean, there's they can close the loopholes at any point. So I'm not sure that's always the answer. But let's move on to our first guest this week, James Knowles and Mark Sale from First Class Metals, a UK listed company focused on discovering economic metal deposits in Ontario, Canada. Today they'll be discussing exciting updates from their 100% owned North Hemlo property, specifically the Dead Otter trend. Following the upgrade of this high-potential gold-bearing trend in July 2024, the team has completed significant exploration work, including stripping and channel sampling across 3 key locations. With 70 samples collected from 18 channels and further assay results expected soon, this could mark an important step towards further drilling and expanding the mineralised footprint. Mark Sale, CEO, has expressed optimism about these findings, and we're eager to hear more about what's next for First Class Metals. Welcome back to the Sunday Roast, gents.
Thanks for having us, Phil.
Yeah, thanks, Phil. Good to be back after it's been a good few weeks, I think, since we've been on.
Absolutely, yeah. So just talk us through these findings and what leads to this optimism, please, Mark.
Certainly. I think the first thing that you've got to sort of get your head around for the optimism is that at one end of this 3-kilometre structure, we've got 3 grams of gold in historic showing. And at the other end of what we've identified so far, there's a 19-gram anomaly. And partway along there, there's a 2.3 gram. So you've got 3 points which make a trend, in my opinion, along what is a defined contact. And this contact, we believe, is mineralized the whole length. We can't say it's continuous at this stage because we haven't accessed the whole length for sampling because it's vegetation covered. And that's why I wanted to get in there and do this stripping. And as we've described before, stripping is removal of the overburden, the vegetative matter, to expose the bare rock so you can sample it. And I was there when they were doing the stripping around the 19 grammer. And yes, my reason for the visual enthusiasm is the fact that it's obviously not a point anomaly. In other words, a single sample generated this. Yes, a single sample did, but we now know that the structure that single sample came from isn't just a point. It's a linear body, shall we say, simplistically. And that linear body continues, admittedly under overburden, to the northwest, to where it surfaces again, if you like, at the 2.3, and then again almost a kilometre away at the 3.1. So that's why I'm enthusiastic, because we're now getting closer to proving that this is not a discontinuous or auriferous structure, but it's a continuous structure over 3 kilometres.
Absolutely, yeah. I was looking at on your X feed, and I saw a really interesting post about, Dead Otter trend, what's it all about, and you went into a lot of details. But one of the pictures showed what looks like red paint on the ground in a sort of grid system. Just talk through some listeners on exactly what that that whole channel sampling and involves.
Okay, well, as I say, initially the excavator goes in there and takes off as much as it can of the vegetative and soil matter. And then you get in there with high-pressure hoses and you wash off the remaining soil. And that is where some of the major logistics come in, to be honest, Phil, is you've got to get the pumps in there. You've got to get access to water. So when the excavator was in there stripping off the vegetation, it also dug a sump. So we had this 2 metre by 2 metre by 2 metre hole in the ground, which was making water. When you've washed off the soil and you're left with, in effect, bare rock, then the geologist goes in there and he maps that outcrop, and then, with the red paint, marks up where he wants the channels to be. Those will be the sort of like up and downy lines, if you like, and then the cross lines are where the individual samples stop, because it's not one continuous sample. I mean, the longest channel that we cut was 3.1 metres. And that probably had 6 or 7 samples in it. Normally a sample would be half a metre, but what starts and stops a sample is when the geology changes. Obviously, if you've got a quartz vein that's 0.75 of a metre wide, you're not going to take a half metre sample. You're going to take a sample that's 0.75. So the geology defines the sample length. So that they are irregular, the samples, and as I say, cut off by the geology. Then once the geologist has put those red lines on the rock, the field assistant comes along with the diamond tipped saw, like a still saw that you see the road workers have, and he cuts 2 parallel grooves along the line of the sample and a cross groove at the end of the sample. And then when that's complete, or if you have the bodies, a third person steps in and starts chipping out the middle section of those 2 grooves and puts it in a bag according to the geologist's sample mark-offs. That's basically the process. It sounds quick when you describe it, but it took us 5 weeks to do that channel sampling. We'd originally intended it to be a shorter program, but with the influx of additional funds, it was expanded. And that's why we took far more samples at the 19 grammer than we did at the other 2 locations. It's not that the other 2 locations weren't up to sampling. It's just that we decided to be quite intense at the area of the 19 grammer, because as we stripped it, as I said at the start, we uncovered more sampleable material, shall we say.
Mark, I'm going to come on and ask you some questions just about North Hemlo as a district or as an area that you have in a minute, but just to focus on the situation that you've just done in terms of taking these samples. Now, this and the 19-gram discovery was obviously at surface. So, from a geological perspective, how do you think it got there?
This 3-kilometre trend that we call the Dead Otter trend, it closely mimics the geological contact between the batholith, the granite rock, if you like, and the greenstone material. Historically, most gold occurrences in greenstone, in Archean terrains, are in the greenstone belts or closely associated with them. And I think one of the other things I've often said to people is there's 3 important factors associated with mineralization, and that's structure, structure, and structure. So you've got this granite. I always liken it to those old lava lamps that my parents or some people's grandparents would have had. These granite batholiths come up through the Earth's crust and either emerge or don't quite emerge, depending on the force of which they rise. And then they nudge up against, if you like, these greenstone belts. And quite often you'll have several batholiths squeezing these greenstone belts together. So it's along that contact that is quite often then the subject of subsequent tectonics. And that contact gets sheared. So you've got the initial hot structure of the batholith, which helps with hydrothermal mineral circulation. Then you've got subsequent shearing, which is even better for opening up voids to put the mineralization in. So, as I think it's been pointed out by somebody, that whole batholith contact, which goes onto the Panther ground, is worthy of reconnaissance.
And you mentioned Panther. So why are Panther so excited about what you're doing?
I think they're excited about what we're doing because it trends onto their property, even though I'm led to believe they haven't yet done any work on the potential extension. But hey, quite often, Kev, these structures need a second structure, and you might well need a structure at 10 degrees, 90 degrees to the apparent mineralized structure in order to cause that extra, the third structure, if you like, the batholith structure 1, the shearing structure 2, and then you have a third deformation event, tectonic event, which then is the loci of the mineralization. So, yes, there's a lot of granite contacts in the Archean, but they're not all mineralized. And they're not all mineralized all the way along the mineralized contact, if that makes sense. One of the things that attracted me to the ground that First Class had was what I said in some of the very early presentations, was the nearology and the vectors. The fact that there was gold occurrences or mineralized occurrences nearby to our ground, and also the geology, geophysics, geochemistry of those nearby mineralized occurrences vectored, pointed towards our property. And Darren's just doing the reverse of that. Panther's just saying, look, they've got it on theirs, it points towards ours, so we're excited about it. But I think the bigger excitement potentially might be the fact that on the Panther ground is what's called the historic Dotted Lake and Fair Service mineralization, which is a mixture of base metals and precious metals. And there was one particular drill hole that had some admirable copper grades in it, the Fair Service showing, and its location is actually still in doubt as to whether it's on Panther's ground or on our ground. In some ways, it doesn't really matter on whose ground it is. The structure from the magnetics, the geophysics we've done, the structure on Panther's ground definitely extends onto our ground. So there's a bit of reverse neurology, if you like. Panther's getting excited about what we're doing because it could vector onto their ground. We're quite excited about what they're doing at Dotted Lake because we're convinced it vectors onto our property. And that's just two of the, shall we say, the hotspots on the North Hemlo property.
Yeah. Let me just ask you the question then about the from a geological point of view. We know that Barrick Gold has a gold mine a number of kilometers away from this Dead Otter prospect. So what is the geological sort of coincidence of these two things? Are they similar in their geological look from what you know so far, or you don't know?
Okay. Well, the Barrick Hemlo mine, yeah, it's 23 million ounces. It's just over 20 kilometers, roughly, as the crow flies from the Dead Otter trend. Hemlo mine, excessive shearing. As I've said, our trend is sheared. Hemlo mine, gold occurrence. Our trend, 19 grams gold. Hemlo mine, slightly uncharacteristic of a lot of key orogenic gold deposits, high in molybdenum. Dead Otter trend, up to 0.5% molybdenum. So there's 3 points straight away. They're both in Archean greenstone rocks. So there's a geological, there's a geochemical, and there's a structural comparison, if you like, Kev.
So from a geological point of view, 20 kilometers is like throwing a stone. So we're not really a million miles away from each other. And you see not coincidences, but many similarities, I suppose. So moving on then, let's talk about North Hemlo as an entirety and not just the trend that we've got at the minute. Because really we can't talk that much about the Dead Otter trend at the minute. We're waiting for the results. hopefully you're going to have those by last week of September, first week of October, based on the RNS. So, but let's talk about North Hemlo as a whole.
Yeah, more than happy to do so. I think I sort of touched on one of the other hotspots in the Dotted Lake Fair Service, polymetallic historic occurrence. And further to that, as was reported widely at the time, there is the West Pickle Lake area, which Palladium, one that was GT Resources now, did a significant amount of drilling on in, late 2022, 23, and they came up with some veritable results. They really did some high-grade nickel copper at depth and then low-grade zones of nickel copper closer to the surfaces, which is exactly what you would want for that style of mineralization, on the basis that if it came a mineable resource, you've got an open pit leading to a decline. So there's that mineralization there. And one of GT Resources' drill holes, one of their wildcats, if you like, was a couple of kilometers away from the West Pickle zone, but within a few hundred meters of our border on another body which they felt trended onto our property. So we haven't really done a lot of systematic exploration up in that area yet, because we have, quite rightly, I feel, been focused on the gold at Dead Otter. So there is that. So now we've got the Dead Otter gold, we've got the polymetallic Dotted Lake, we've got the West Pickle Lake base or battery metals in the mid-northeast. And then to the north is the newly accreted on-gold property, which is contiguous with the North Hemlo, and that's why we really call it all just one property now, of over 100 square kilometres, I might add. So it's a significant sized property. So no wonder it contains these four hotspots. And the hotspot on the on-gold property is a lake sediment sample we took during the due diligence just to appraise its potential before we signed the deal. And that's one of the highest gold-bearing lake sediment samples that has been reported in the North Limb. So there's a lot of encouragement and exploration to be done on the on-gold property as well. So we've got, if you like, gold in the north, gold in the south, and in between we've got polymetallic battery metals with some precious metals as well. So you're quite right to go away from the Dead Otter, shall we say, Kev, because there are other veritable exploration targets on that block.
Yeah,
so
it's four projects in one, realistically, isn't it, Mark? When you look at it, I think people don't really understand the scale of the project, and the pure size of it is it's a district scale project in itself.
Yeah, because I was talking with James just about maybe coming out to Ontario to see some of these projects, and he was saying, well, it's 6-hour drive to this and it's 8-hour drive to this. It's like, I think the vastness.
He's put you off, hasn't he, Kev? Because we did about a 9-hour drive in Zambia. We were in a truck for 14 hours one day, and I've never done anything like it.
Yes, well, I must admit, whenever I'm over there and I obviously hire a car, I always make sure the miles are included, because, yeah, if I go 3 hours west of Thunder Bay or near 4 to the Sunbeam property, and then I do 5-6 hours east of Thunder Bay to Manitouage, where we base ourselves out of for North Hemlo, you are clocking up a fair number of miles. And then, of course, the Zigzag property, which we don't talk much about these days, that's another 3 or 4 hours north of Thunder Bay. So Thunder Bay is well suited as a hub for us, and fortunately it provides most of the things you need. But yeah, there's a lot of driving involved. I spend a lot of time in a car on my own driving when I'm over there.
Yeah, I was just going to ask you, actually, you come on to those two projects, Sunbeam and Zigzag, because you gave an update sort of towards the end of July, an operations update, and you were saying that you're obviously enthused with the speed at which First Class has started the field season. So just talk us through how things are going with I think you were looking at the porphyry focus with you instructed Prospect Air to commence this high-resolution magnetic survey of those Keris gold property blocks, and then review and sample of the new in-scope core. So just talk us through how things are going, and then also on to, I think, Zigzag, there was some sort of exploration permit application submitted as well.
Yeah, well, actually, well done for reminding me about those, Phil, because we have just completed the heliborne mag survey of the Cares Gold project, and I forgot about that one, actually, Kev. That's about 10 hours from Thunder Bay to the east in the Timmins area. So anyway, I digress. So yes, we've just completed that heli survey of the old. It went over the old drill area where the compliant resource is, as well as extending to the southwest of the drilled area. So that's currently with Prospect Air being processed, and then we'll send it out to PGW, who are Toronto-based geophysical interpretation consultants. They've done all the work for us in the past. They did the reinterp of ESSA, they did the North Hemlo stuff, as well as looked at the Sunbeam property. So yeah, Kerrs Gold is ongoing. You're quite right also that we have a new exploration permit granted on Zigzag, which would allow us to do more stripping on the main zone, as well as stripping on what we believe could be a sub-parallel trend to the south, a couple of 100 meters to the south, or it might be a spur. There's not been enough work yet to identify whether it's a sub-parallel body or a spur off the main body. But anyway, regardless, the new exploration permit will allow us to cover that with mechanical stripping and, of course, drilling as and when the time might be appropriate. I'm sure the people listening will appreciate that at the moment, nickel is not the main game, and that's why we're more focused on the gold, but lithium will come back, and when that happens, we will revisit Zigzag, so to speak.
Good. No, I was going to ask that question to James. I said, has there been any more interest in the Zigzag project, or is it more a case of it has to be put on the back burner because just right now the economics aren't great?
I think the pure price of the lithium, spot price at the moment, is putting off any deals that you get true value for it, Kevin, really. But you need to note that Green Technology Metals, the main operation in the area, recently had a substantial investment into them from a South Korean firm called EcoPro, who will certainly advance the development of the concentrator, the logistics locally, and the facilities which they're putting in place. So that whole area, as we approach 2030, is going to be a hotbed for lithium production. So the fact we sat on a known deposit, which is very close to surface, we do see substantial value in that property. But as all these things, cycles are cycles, and maybe it's prudent to hold on to it for the time being until the pricing structure of lithium allows for a deal that's beneficial to FCM.
And also to add into that, Kev, the fact that it is now fully permitted for another 3 years adds to its attraction to any company that's interested in looking at it to bring it on, shall we say, from the stellar drill results that we had. But the other
people's radars when that development continues in that part of the world, it couldn't be better located, I would say.
Absolutely. I mean, Green Technology have got their Seymour Lake to the west of us, and they've got their Falcon Lake to the east of us. They literally have to drive past us if they're moving ore from Falcon Lake to their proposed processing area at Seymour Lake. So it's a no-brainer, really. And hey, whenever I'm in Thunder Bay, I rub noses, so to speak, with the other lithium companies, and there is no doubt that at the right time, somebody will be more than just interested in talking to us about Zigzag.
Yeah. There was also the Quinlan prospect, which I remember you mentioned. Was there any update on that? I think you were due to go and do a sort of site visit there.
Right. Okay, Phil. The original sample that led us to take up the property was taken from a helicopter lake sediment survey. The guy spent a couple of hard yakka days trying to find land access as opposed to access. And unfortunately, at this stage, we couldn't find any land access. But I'm going to get back in touch with the First Nations because they might well know of quad trails that will get us in there from their moose hunting. The moose hunting season's on at the moment, actually. So yeah, there's no real update on Quinlan. If we find that we can't do ground access, then what we will do is a short heli reconnaissance visit during the fall when all the leaves are off the trees, and we'll be able to see the exposure, the rock exposure better. So yeah, there's no further update on that at the moment, other than it's pending, work in progress. But you did ask me about Sunbeam, so I would like to revisit that one, please, because I feel Sunbeam is the hidden gem of the first-class portfolio. It's 70-odd square kilometres now, the property. It's got those 3 sub-parallel gold-bearing structures on it. Here we go, structure. So we've got all three structures on Sunbeam. Isn't that just a coincidence? Each one of them has historic gold production on them, the Pettigrew trend, the Roy trend, and the Sunbeam trend. The main one, the Sunbeam mine, as we know, was a producing mine up until 1905. We've barely scratched the surface on Sunbeam property. However, we have literally scratched the surface in so much as we did stripping at both Roy and Pettigrew, which I'll say, I think it was 18.8 grams was the better sample from Roy. But yes, you're quite right, Phil. During that stripping program, it came to light that the host, if you like, porphyry was auriferous too. And one of the samples they took was over 4 grams gold. I think that's actually transformational in how we approach the Sunbeam property, because we've gone from potentially the half-metre 90-gram drill sample that Newinsko reported to something that could actually be, okay, low grams, not double figures, low grams, maybe only 1 gram, but it could be several meters wide. You could be looking at the mineralized, high-grade mineralized gold structure coming and going of a meter or two. And then you might have, shall we say, I'm waving my arms a bit now, you can't see me, but you might then have 5 meters on each side of that of a very elevated 0.5 to 5 gram material in the porphyry, which means as an exploration target, you're not walking through the bush trying to find something that's 0.5 meter wide. You could do a soil sample program, for example, across these 3 sub-parallel trends and pick up gold anomalies, gold hotspots, which the old timers would never had the opportunity to discover. So I think the recognition of the gold in the porphyry is transformational in our ability to identify further zones of high-grade material. And I'll also invoke what I said about Dead Otter, is that I believe there's a crossing trend. These 3 parallel trends are trends to the northeast. I believe there could be something coming from the northwest. And it's where that northwest trend hits the gold, apparent gold-bearing trends, is where you get these hotspots like the Roy, like the Pettigrew and Sunbeam mines. So soil sampling would help us to identify more of those cross trends and give us better understanding of the structure and, of course, define targets for stripping and drilling. So Sunbeam, as I say, I think it's the little gem in the crown, personally.
I was just looking at those TerraX cores that I think were in the RNS there, which showed the gold grade in the porphyry wall rock. But so what, presumably, are you revisiting those cores? And I think there was up to some like 1,500 meters of core that would need reviewing. I mean, what is that ongoing process?
No, we've completed that, and the EGS Emerald Geological is currently formulating a report on that, which will include comment on the resampling that was done. So yes, that is definitely work in progress, and I'm quite excited about it. I mean, I think the new discovery that's looming at Dead Otter is significant and transformational for first class. But as I've said, and I'll say it again, I think Sunbeam could be the one that is a real focus for us going forward.
So, Mark, just as a last question, first class metals, get a project, take it up the Lassonde curve, sell it, or joint venture with it, or whatever. What are you looking at right now that's right at the bottom of that Lassonde curve that could be the next project for first class metals?
We've got people in the data room, and we've not hidden that fact, that are looking at several of our projects. It would be preemptive of me to name the projects, but we are moving towards monetizing other projects that we currently have on our books. I'm constantly being approached by people who have projects that they want us to look at with a view to taking on. I've said to James that unless an absolute no-brainer comes along, that we will take on a new project in exchange for the next one that we sell off. Hopefully that answers your question without too many riddles.
Yeah, no, it says it all. It says it all. I mean, you've got a lot on your plate. I mean, that was part of what I was asking. Why I was asking was there's a lot going on there, and as you say, if there's a no-brainer comes along, you're going to add it. If there isn't, then there's no real necessity to add.
It's worth mentioning, Kevin, as we touched before, North Hemlo. It's apart from the Dead Otter trend in the south, we haven't really done a great deal in the the other components, that property in itself could be quite easily split into its individual areas, and there's a hell of a lot to go for, which we haven't even touched yet on North Hemlo, north of Dead Otter. So it's all to play for, really.
I think James is right, and I think what James is alluding to is the fact that if somebody was interested in the base metals, it doesn't necessarily mean that we're not left with the gold. The other thing I would also add, please, Kev, sorry to butt in there, is that you're right. We do have quite a number of properties on the book, so to speak, but I would urge caution to anyone who thinks, they're spread thin, how are they going to service them all? Every one of our properties has full assessment credits to the end of this year. So we could do nothing for the rest of this year. I mean, I know there's only, 4 months left in it. We could do nothing for the rest of this year, and all our properties are good into next year. A number of them, in fact, the majority of them, certainly the smaller ones, have assessment credits for several years to come. And that's why we are currently focusing on the gold, the North Hemlo, and the Sunbeam properties, because whilst they are fully assessment credited, those are the ones that we want to work on, as opposed to the Canadian system where the tail can wag the dog, in so much that you have to do work on them, otherwise you lose them. We don't have to. Cocoa, fully assessment credited into next year. Magical, fully credited. Sugar Cube, fully credited. As you know, we sold Enable and McKellar to the 79th group, so Zigzag, fully credited. So the three properties of merit that we want to work on, Essa, Sunbeam and North Hemlo, we can focus on them because we want to. It's not like we have to. Kerrs, gold, fully assessment credited into next year.
And all this for £3 million.
No, all this for £3 million on a gold price of $2,519.
I'm sorry, Phil, you can't have it for $3 million. And I'm sure I speak for James actually as well. Well, yes.
You can have a bit of it at that, Phil, but I'm sure you'd have to pay a lot more. We see a lot more value than $3 million for sure in those projects. It's, in our opinion, it's a crazy undervaluation at the moment.
To comment on your share price zoomed up to 5p not too long ago, only a number of weeks ago. Obviously, there was a need to raise money so you could do this work now. And it seems to be popping up a little bit now. So let's see what happens over the next few weeks and months. And the reality is, from what you're saying there, Mark, there is going to be some results. I'm pretty sure there's going to be some gold, and those you haven't dug channels of just granite, I would imagine. So let's see how that works out, and I wish you luck going forward.
Thanks. Well, I'm heading out there in just over a week to review what's been done and also meet with people. So we'll keep you posted.
Okay.
Yeah, give us a shout and we'll get you back on.
Yeah, on that note, we'll say Mark Sale and James Knowles of First Class Metals. Thanks very much for your time.
Yeah, thanks. Phil. Cheers,
thanks,
Kev.
Phil. Thanks,
guys.
So let's move on to our second guest this week. We're joined by Paul Johnson, seasoned investor in the junior resource and fintech opportunities. Welcome back, Paul. How's life treating you?
Oh, well, it's a bit chaotic at the moment. We've got a house full of cats. One of our cats has had 7 kittens. This is something I put on my Twitter feed, actually, when she had her first set of kittens in earlier on this year. And we were hoping that, we'd have a second litter, but we wanted it to be maybe next year. But she escaped through a bedroom window and had an interesting night with a ginger tomcat. And the outcome is we've got a 7-year arrival. So it's chaos at the moment.
I'm sure it is. Congratulations on that, I think, are in order.
Yeah. Oh, yeah, absolutely.
I was just seeing that, actually. Why does I think 6-month-old Basil, why does he enjoy relaxing with an Aldi IPA?
Well, I put that on my Twitter feed, and you've seen that. I think it's quite funny because Aldi do respond to these things, and he's quite good, Basil, because he's quite keen on a strong beer, and it's 5.5%. But he also likes to save money, and it's £1.49 that bottle that's on the Twitter feed. So it's really good stuff. You don't have to drink too much of it for it to have an effect, and it's quite cheap. So yeah, he's a clever cat.
Had he had one of these beers before he escaped for the night?
No, he's from the first litter from Maggie, so he doesn't really do any escaping like that.
Good, very good. So how many of the first litter did you keep?
Oh, we kept one. We had 4, we lost 1, and then 2 went elsewhere. This time we're keeping 1. We're going to call it Boris because it'd be nice to have a Boris Johnson in the house. And well, six of them are going.
Is that the cat that you're going to kick?
No, but he'll be very good at arranging parties, won't it? That's what he shouldn't do.
He'll get divorced many times, though, and have lots of kids.
Yeah.
Well, doesn't everyone nowadays?
You won't know how many kids there'll be out there, will you? So, Paul, let's look at. You obviously know that we talked to Rick Rule last week. Give us your thoughts on some of that. I presume you've listened to it. Give us your thoughts on how that went.
Yeah, I have listened to it. I actually bumped into Rick Rule many years ago at PDAC in Canada in the coffee queue. He actually got in the way, so I had to maneuver around him. He is a bit of a man-mountain. And I like Rick. He's very, very articulate. He's got a great narrative. He understands the sector. He's very wealthy. He's just the kind of characteristics that your average private investor doesn't actually want to focus on if they're looking at making investments in the junior resource space. Because it's okay if you've got $500 million to invest and you can really go for it. And if you make 40, 50, 100% on a share, you've really made a lot of money. But for most people that will have a much smaller pot, let's say it's 5,000, you desperately need to find the 10 baggers. And you'll find them in scenarios that I find that, Rick Rule is not looking. And I know he talks about how, 1 in 3,000 projects turns into a mine and the chance of success is very low. But in the last cycles that I've experienced, the stocks where I've made an awful lot of money have never gone on to develop a mine. So it doesn't really matter. And yes, you need a story. For sure, you need a good story. Yes, you need scalability in that story. You need believable management, good promotions and communications. You also need a reasonably tight capital structure. And if you get some of those ingredients together and the market gives you a fair win, in good or bad market times, then you can make dramatic returns. So I think it's good to listen to people like Rick Rule. And it's great to have them on the show. You'll definitely get a big draw by having them there. But I do find there's a bit of a mismatch between average Joe private investor, what they're looking to achieve, and what the likes of a big, effectively fund manager like Rick is looking to achieve in his own portfolio.
Yeah. What do you think was the sort of key take home there, or the pearl of wisdom that Rick said? For me, it was interesting to hear I think he called it Pareto's law, where he talked about effectively the 1% and hanging with them and investing in that 1% or being with the 1% to take the investment through. And he's always talked about, investing in the management, as he's done with a lot of companies like Power and etc. Was there anything else that you would take home and apply to the way you speculate or invest?
Well, he did say that AIM was a shitty market.
He did.
And I suppose the problem is all these junior markets are a bit shitty in one way or another. Perhaps we have more problems with AIM than ASX or TSX. And I suppose it comes with a buyer beware warning, doesn't it? The problem that you tend to find is that the vast majority of investment that people make is on the back of ramps, is on the back of speculation on social media, and is on the back of, not on the back of real research, understanding your market, understanding how it functions, understanding the stocks, the management, their communications, all the features that ultimately will deliver success are not in focus. So one thing that I know Rick does, and the organizations that he works with, is they spend an awful lot of time assessing the companies that they invest in. And they may be doing it with different drivers that your average private investor will need to use. But I would say if private investors took themselves seriously, respected themselves more, and spent the time and energy going into these shares properly, they would have a much greater chance of success. And that's before you get to an even bigger factor, which is trading emotions and how to keep control of yourself in these difficult scenarios. Because people buy popular. They buy stocks with a nice chart behind it at that point in time. They don't buy unpopular. They don't buy stocks on the floor. They don't invest when they really should to make the money. So, yeah, I think conversations with Rick or any other big investors are great as part of the overall balanced diet of investing information.
Very good. So tell us what's on your radar at the minute.
Well, I'm a traditionalist. I don't like to hop around too much. So I pretty much hold the same kind of portfolio as I have done for quite some time. I've not been massively minded to invest in a lot of new stocks because the markets have not been great. There haven't been a lot of great stories around. I remain very much a massive fan of what Oliver's doing with Golden Guardian Metal Resources, ticker GMET. I think that's a unique and wonderful business with a fantastic leadership, vast amounts of cash available to it, a really good tight capital structure, and a pretty amazing portfolio. And I would say that because a bit like Victor Kayan with Remington Microscreen back in the day, I bought the company originally when I was CEO of Power. He's done far more with it than I thought would be possible in a down market. And the irony is, I actually think he's got more upside to come than he's had upside so far. So I'm very optimistic on that. We've obviously gone through the layered early exploration phases with his ground exploration, including just the general physical on-the-ground mapping, and then the geophysical work that he's done, the target selection. He's been drilling at Pilot Mountain, the main project, for a few months. The drill results obviously are going to be flowing through over the coming weeks and months. I think he said that they'll be in batches, so that there'll be regular news feed from the drills. So the groundwork is done, the share price is strong, the financial position is strong, as is the proposition, and we're now about to start to get the high impact announcements coming out about drill success, and I hope, and they should be, in fairness, really successful. And I hope it drives it to where it should be, which I think is over £1 a share.
Very good. And how is that going to impact Power Metal?
Well, it's a funny thing, isn't it? Now, I've got, you would say, okay, Power Metal at the moment is valued at or around its holding in GMET, or it varies, but about that kind of level. You would think that Power Metal, where GMET is only, say, 1 out of 12 different sets of interests, would be fully re-rated on the back of this. But it doesn't always fly like that. I remember back in 2010, Red Rock Resources had a holding in Jupiter Mines, an Australian-listed company. And Red Rock price didn't really move dramatically, even though the Jupiter Mines holding represented its market cap. But what happened is that I think once the Jupiter Mines market cap exceeded materially Red Rock's market cap, it's like the market switched on. And I would say that if you see GMET worth 125%, or Power's holding in GMET worth 125%, 150% of Power's market cap, it will get to the point where it's undeniable that Power is undervalued on that basis. And when that happens, the valuation of Power will likely go up. People will see that rise. They'll start to look at the Power business model in a bit more detail. And then that should drive, one would hope and expect, the value of Power up. And then as people look at the Power Metal business, they'll be interested in the uranium, they'll be interested in what they're doing in Saudi, they'll be interested in what they're doing in Africa, and all these different elements will start to draw people in and will make a big difference to the value proposition, which at the moment is very much under radar, I think, for most investors.
Very good. So you were involved a bit there for a few months in Katora. Can you tell us any more about that?
Well, I guess it's Katora was a business that morphed out of Opera Investments. It was, I think it was a main market, a shell a few years ago when people still did shell things. And then it became Katora Gold on AIM, and it had some project interest in gold and nickel exploration. Its main project interest at the moment that people are aware of is the Haneti project, which it holds 65% of in joint venture with Power, 35% Power Metal, and a few other interests that they put into their recent announcements. And they effectively did a refinancing back in February, raising £825,000, and were able to extinguish some, long-term liabilities or current liabilities even in that business that have built up over time. And then brought in a new CEO, Patrick Cullen, a new chairman, Sean Wade, the CEO of Power. And it's a revitalized business from a managerial perspective and from a financial perspective. And really, it's a case, everyone hates this, of let's see what they do, really, going forward. And that will be via market announcements, I guess, rather than any speculation, but they're in a fantastic place, the bottom of the market in the junior resource space. There's lots of opportunity to acquire projects, to stake new ground. There's some fantastic opportunities out there at the moment that can be acquired for next to nothing. So if you're ever going to do a revitalization story, which is the Turo, then now is the time to do it.
Very good. And if you had to choose a stock that you think could massively outperform the market in the next upswing, what do you think that would be? Or you're allowed 2 or 3 choices if you wish.
I've been involved with quite a few companies in London over the years, many of which people don't know about or have forgotten or were not there at the time. But one company I did refinance and restructure was called Papua Mining back in 2017 or 18, I can't remember. And it became Rockfire Resources with the ticker ROCK, Rock. What a great ticker for a company that's in the mining exploration space. And they announced this week a 500% JORC compliant resource upgrade at their Greek project.
Malai.
Yeah, it's Malay, I think. They how you say that complicated word. And that JORC compliant resource includes 1.5 million tons of zinc equivalent. And quite a remarkable resource, $4.3 billion of value based on $2,800 a ton zinc. They've also found, and this is not part of the JORC compliant resource, but I think 105,700, I'm doing this from memory, kilograms of germanium, which is worth about $389 million on top. So about 4.7 billion in situ. And the market cap's just over 5 million quid, 5.5 million quid. They've got what seems to be, and you never know, a reasonable amount of cash in the business with this major resource asset. What's the broker, I think, could have this wrong, put out a note. I think, is it 2.7 pence share price target? I might have that wrong. And the current share price is 0.22. So a fair way to go. And because it's a crappy market, to use Rick Grill's terminology, and certainly it's a down cycle, then what you've got is a real undervaluation situation, in my view, at Rockfire. And that one could dramatically outperform. And it has done before, major performance before, where it's gone up dramatically, but not immediately after news. So that's one to have a look at, Rockfire. I'm massively a fan of the fintech in crypto space and completely off radar at the moment and very, very lowly valued. Even I'm upset about it, is Coincillion PLC with the ticker COIN, COIN, which is on Aquis, has a history in 2017-18 and in 2021 of going up. I think the first time was 17 times bottom to top, and the second time was 27 times. And that was on the back of Bitcoin moving to another super high level on both occasions. And I think that's going to happen with Bitcoin again. So Coincillion is one that I certainly would watch. Outside of that, I suppose I'm desperately hoping, and maybe you can help me out with building my confidence here, that Conroy Gold manages to pull a rabbit out of a hat. I mean, in fairness, it will be a bloody miracle, but that stock has been...
It needs to pull some gold out the ground, not a rabbit out of that.
Oh, well, you know, I mean, in fairness, the very few companies I know that have successfully built shareholder value in the exploration space by mining, generally speaking, it's by building up the resource and demonstrating confidence and upside potential for a bigger firm to come along and do it. And they are prime territory. When I was back in Metal Tiger days and had some quite high-power geologists working with me there, and they were always staggered that project or that portfolio of project licenses has not attracted the attention of a big gold major. So, you know...
I personally think, well, and I don't know, I personally think that miracle could well happen in the next 6 to 9 months. Could be long before that even, but I actually think that miracle's going to happen. It could be such a profitable project with the price of gold and the potential for gold to go even higher that I just don't see that they're going to pass out just because of the scale of it. I'm talking about the majors. I know when they went to Canada that they did speak to quite a few of the majors. You've now got Marion, who's joined, who was... serving with various majors, but a large part of her career was with Barrick Gold, now on the board. So I think the indications are that it's possible. It's not going to take an act of God for it to happen, I think, for this miracle. But if the miracle happens, what could be the upside on something like Amigo?
Well, it's interesting because I don't know the precise number, but 40-odd million shares in issue. I think they've got 570,000 ounces in JORC-compliant resource indicating inferred. And it's clearly a multi-million ounce project. At the moment, the share price is 8p. It's had a bit of a pickup in recent weeks. So that gives them a market cap of, probably under 4 million. They've got some debt in the business quite significantly from the directors, shall we say, loaning the company money, which, of course, you have to really add on to it. But even so, that kind of business, that kind of opportunity, you would comfortably see trading in the tens of millions. Now, we saw with Greatland Gold, where you could have an effective 25-30% interest in a project and your market cap could rise to 1.2 billion, was it? And it's that kind of project potential. And I know they do compare themselves to a degree to certain of the larger Australian projects in terms of the potential. However, what needs to happen is that the market has to get a degree of confidence in the stock and in its direction. No doubt a major coming in with the right deal would electrify the shares. Certainly if that initial entry into the company came with some cash to provide some working capital and didn't have to default to a very dodgy marketplace. And we're seeing that more in the UK market now, where the sophisticated companies like your GMETs, your Powers, are starting to go and raise capital not from UK brokers, who are seeking that capital from clients who are very happy to take warrants and flip stocks for 10-20%, or even just get the money back and move on to the next one. So if they're able to get some capital from a non-traditional UK broker source to help them with their working capital spend, then that's going to make a big difference too. But we know from the past with Conroy that it moves sharp and fast when it does get some positive wind behind it. So there's nothing to stop it trading at 50p in a matter of weeks if things go well. I don't hold out a lot of confidence, but I think the risk-return kind of profile is pretty strong for people in that investment. But my confidence is pretty much battered along with everyone else's at the moment.
I think with Demir exiting, it's absolutely smashed the sort of confidence in it. Do you know what I mean? That's been the real negative of the last sort of, let's say, 6 months or whenever it was probably 6 months ago now. But and obviously the people say, well, there's a lot of information was gleaned from the drilling, the amount of meters that they did in the ground, which absolutely, they've learned a lot more about the different projects. But I think, as Kev says, it'd be interesting to see these people that they brought on from the different companies, whether there's going to be any potential, future joint ventures announced for the projects. I think that's what the market's waiting on, right?
Yeah, I mean, the market's waiting on anything to drive the price up, and then most of the market will follow in when the price gets driven up.
Yeah.
And there is a few people, I think, that can assess sensibly, as with many other stocks, what the factors are that will drive market interest and buoyancy and get that share on the top leaders board again, which will bring in that herd approach. But it's not, I mean, these majors, bless them, they are... they're not always the best organisations to have in projects and in companies, but they certainly reinvigorate them price-wise for a good period of time. I mean, that was another of Rick's points. That was it Sovereign he was referring to? I can't remember which company it was.
Yeah, it was Sovereign.
Sovereign with Rio, yeah.
Where he said that, if you've only got one buyer in the auction, then you're not going to get an optimal outcome, but there'll still be a good outcome. And to a certain extent, that's the case. But quite frankly, if you've got a big gold major that goes into a Conroy Gold scenario, then the price is going to react violently and higher in most cases. So if you want to make some money from that scenario, well, yeah, you've got to take a punt pretty quickly, because if they did come out with that kind of announcement, then the price will move sharp and fast. Can you expect it? Well, based on their history, there's a reasonable expectation, but it is a risk if you put your money in. But it's a much better risk now at 8p than it was at 28p.
Let's have a look at some of the other movers and shakers of the week that I've got down here. We've got Sealand Capital Galaxy. Don't really know much about them. SCGL, they're up some 200% on the week. We've got Amigo Loans, provider of the mid-cost credit in the UK, that's currently in an orderly solvent wind down. They bounce back some 90%. News of a new appointment, James McCall trying to steer the company into what it looks like a new role, maybe a wealth management focus. I say it remains to be seen how all that pans out. Rockfire, as you alluded, they were on my list, Paul, up some 40% on that 500% increase in resource at the Malai project in Greece. I was looking at the numbers as well, and yeah, I mean, it was like, was it zinc in situ, a value of about $4.3 billion. Germanium, as you mentioned, in theory, of about 389 million, with a market cap of 5 million. I don't know what the market's missed. I mean, and there's also silver there, I believe, isn't there, and some copper. So what do you think the market's missed? Do you think that there will be a re-rate on this one?
It's well, the market doesn't care. Yeah. Because the market's been on holiday and it's now addressing going back to work. And it's about people, isn't it? And and I think most people in our space, genuinely, who are fixed and looking at the moment, are invested already. And for them to make an investment decision in anything requires them to move out of what they already have, which is probably heavily undervalued. But I do think you have to look at these things from a cold perspective. And I used to do this when I was running the public companies if we had investments. And the one question I would always ask of people in the business is that, look, okay, so we've got, £1 million invested in that company right now. If we didn't have that investment, but we had the £1 million in the bank, would we spend £1 million on that investment right now? And if the answer is no, then part of that no is because it's not the right thing to do, and you need to reduce your position. Now, sometimes you can't because of lock-ins and all that kind of thing, especially if you're a public company doing deals as we did back in the Metal Tiger days and with Power Metal. But if you do have a choice, that's the cold, hard question. And the reality is, for most people, it would be a good idea to get rid of things and to move the stocks around. For most people, it would be a good idea to have some degree of diversification. I'm not a great fan of was it Warren Buffett or someone connected to him that said it's diversification when you spread yourself too thin, but that he's invested in very big value stocks that have some degree of certainty, underlying cash flow and fundamental business. In our case, it's hopes and dreams in the junior sector. And that doesn't matter whether it's a brand new, brownfield exploration project or whether it's a resource that's been taken into production or an existing producing resource that you're hoping can deliver a profit. All have their massive risks that most people don't cater for and don't think about. So having a degree of diversification is good. So it's a really, really kind of tricky world out there. But if you can take a cold view on your positions and then times like this move them around. I had some of the best success in my life when I sold out some loss-making, horrible positions and bought some fresh, opportunistic stocks in a market like this back in early 2009. I sold some of my long-lost loves, and it was like breaking up with a long-term girlfriend, and then moved them into some new opportunities. And within a matter of weeks, I'd multi-bagged my own portfolio. First time it had happened really in my life in such a short space of time. Yeah. And that's the problem in the market. People are stuck, and they need to unstick themselves and start to look for some better opportunities.
Yeah, I think there's a lot of that, and there's a lot of people who are what I call one-stock wonders. They are literally holding and pinning everything, putting all their eggs in one basket and reliant on it, and they're holding it, maybe it's 80% down, and they're not understanding that sometimes you need to get out of those positions, you say, and move your capital elsewhere. But one thing, I mean, seeing an RNS like that in the week from Rockfire on a 500% increase in resource, sort of 10, 15, 20 years ago, you've been in this space, would you expect that to move the dial a bit more than, 30, 40% increase? Because that looked like a gangbuster RNS to me.
Yeah, it was a gangbuster. You definitely see it in the past, like 120, 130%. It's up on the day at 65% up. And then within about 2 or 3 or 4 trading days, the volumes would go through the roof. The entire register would trade 1 or 2 times over, and you'd find yourself up 200-300% at the end of the week. And it would just be staggering. And it isn't happening at the moment. It doesn't mean it won't happen. It just means that you're not getting that immediate reaction that gratifies you, when you either are a holder or when you buy in on the day. And it kind of destroys confidence a bit in the share, which is really unfortunate, because that kind of announcement should fill people with enthusiasm and hope. And it can actually set your register back a bit where people think, will this ever go up? The answer is yes, it will, and it'll find its way.
I think the mentality needs to move away of the market of taking these 10, 20, 30% gains, because that's holding a lot of it back, isn't it? As soon as you get that news, there's a sell on news mentality. And whereas before people would just be loading and trying to buy, I think you summed it up. The stock market is the only place, the only sort of market where people do not buy more on when it's sale season.
Yeah, because you're not actually buying the stock. You're buying its potential, and its potential seems more alive and available when it's on a positive growth curve price-wise, not when it's slumped on the floor, not when there's not much conversation, not when there's cynicism in the background. But that's when, with all those negative things, that's when you've got the best chance of success. Very rarely does the market give you an opportunity like Rock, where it's absolutely obvious that they have an asset of tremendous value. I mean, they've got 19.1 million ounces of silver in that JORC compliant resource.
Yeah.
And that's about the equivalent of $550 million, I think, something like that of value. Yeah. Astonishing. And we're all, if you look at your Twitter feed, you'll see every day multiple comments from people about how silver's probably going to have a major run.
Yeah.
And maybe that Rockfire will kick on the back of silver going up, to $35, $40.
Well, we saw that with Alien. We saw that with Alien Metals. They got a massive kick when we had the boost, the doubling of silver price, didn't we? Back in sort of early 2020s, 2019, 2020, there was a massive run on the Alien Metals. Obviously, big silver assets. But give us your sort of outlook on the way you see the markets going. We've obviously got gold at all-time highs. We've had copper that has been on a recent run. Obviously, that's cooled off a bit, and we've seen some of the other metals like lithium pull back and cobalt as well. But give us your sort of view on the way you see the market going in the sort of 6 to 12 months.
Well, I always worry about this time of year because all the big hits, or a lot of the big hits for the markets tend to come in October. I think it's because the Americans, bless them, in the financial institutions go and visit Mickey Mouse in July, because they have their holidays about a month earlier than we do in the UK. And we all know that in the financial business that things go wrong when people go on holiday. And the impact of things going wrong doesn't tend to surface until about 3 months. It's about a quarter later, which is why I think we have so many problems in October around the world. So I worry about big market crashes, which can impact any speculation you have about what could happen in the markets. I think there's a US election coming up, and I would have thought that the sitting kind of president will want, and the team behind them will want to keep the market stable. They don't want the 401ks crashing. And I think any president coming in will want to keep stability. So we'll do all they possibly can to have that run, at least for a few months. So whilst there is very clearly a massive crash, danger, hopefully it will be abated because of that US election. I think in our space, you have to look to one metric, and that's the price of gold. Now, it's $2,500. It keeps nudging nominal highs continuously, and that's great, and it will probably smash through them and end up $3,000, $4,000 in the next 12 months. It's a way off its real high because, of course, the impact of the declining value of the key currencies around the world means that gold should probably be trading at $10,000 really, rather than $2,500. But it's the fact that it leads the way, and it always has been across the metal space. So I'm very confident that we're going to have a good run. I think we've had a down run for 3.5 years, or say 3 years. In reality, it's been longer than that because COVID and the sudden acceleration of stock prices post the COVID or during the COVID lockdowns gave us a full sense of what the market was. And a lot of people came into that market, suffered, benefited from great gains, thought they were masters of the universe trading-wise, and then suddenly lost them all in the collapse that happened thereafter. So a 3.5 year or potentially longer down cycle is a long period of time. It does snap back very quickly when it turns, and that keeping an eye on that gold price is important because that will be the ultimate driver. There is a real lack of exploration and new discovery across pretty much all the metals, in fairness. And even those sectors where it's mind-numbingly obvious that the price of the commodity should be higher, like uranium, and there's a massive need for proper solid new discoveries, it isn't happening quite yet. So it's a bit frustrating. You can kind of feel that it's never going to happen. Well, I can tell you, it does happen. I've been invested in this space for going on for 20 years now, and multiple times I've been in situations like this. So it's coming, and it'll be fabulous. And in fairness, I'll get a fair amount of fair criticism by people saying, well, you keep saying this. Well, because the only sensible thing, if you're trying to comment on the markets, you can do is act like a stopped clock and stay in your position, because you will be proven right. So what do I think is going to happen? I think we're going to see, barring a major collapse that will take us out of action for about 3 months in the metal space, I think we're going to see a very rapid acceleration of individual shares that have a very good market profile. So your GMETs, I think, are going to see dramatic advance of interest, particularly with the capital structure as it is. I think you'll see your likes of the Rockfires with a real investment proposition attract quite a large amount of capital and go up in price a lot. The first 12 months of this move will be focused on specific shares. There won't be a wide, massive market increase. Things will probably stabilise or go up a little bit across the board, but I think it will be individual shares that outperform. In the second year, you'll see there's tide coming in and all boats lifting, and you can pretty much throw darts at a dartboard with names of stocks on it, and they'll deliver for you. But in this first year, if you want to get in on that big rise, you've got to be selective and carefully where you put your money.
Very good, Paul. We wait. And while we're waiting, have you heard of a stock called Incanthera?
Yes, I have heard of it. I don't know much about it.
Okay. They're just about to, in the next few weeks, do their first bunch of 250,000 sales of their skincare products. That has an advantage over all other skincare products in the fact that it actually gets through the derma level of your skin to actually have an effect. And they've teamed up with the Watson Group, which is one of the biggest pharmacy groups in the world, or skincare groups, and about to produce about 10 to 12 million pounds worth of revenue from that first group of sales. It's also on Aquas, and I think it could be an absolutely monstrous company.
Well, in fairness, you do look like the type of guy that's into skincare products, so I can see why you would be interested in that.
I think I need them. I don't use them.
There are a number of areas in our world that will always be successful, and it's anything that is quasi-addiction based, without a shadow of a doubt. Skincare, therapy, maintenance, improvement is one of them. We talked previously about vapes and I think was it Chill brand that we covered many moons ago. And these markets that the companies are involved in, dramatic, mass, permanent markets. So that makes sense. I'll go and have a look. I must admit, I only buy shares in fintech and mining and exploration. But maybe I need to branch out into skincare now.
Sorry, one of the things that encourages me with Incanthera is that effectively it is a biotech company, because ultimately the product will be able to deliver skin cancer assistance, I don't want to use the word cures, to the derma skin. And this was where this whole beauty product things came from. So because they're able to finance, they should be able to finance the biotech side of things and the drug side of things from the sale of the products. I think it could be an absolute monster, as I say.
I've found in these scenarios where revenue suddenly leaps, you've got a couple of issues. The forecasts are one thing, actual delivery channels and having the market to feed this supply into is one thing. The thing that's often forgotten about is financing, the massive cash flow requirements that are needed to actually build a business like that, often from a low base. So if the company has the channels to get the product through and it has the financial backing to enable it to fund this massive expansion of its operational activities, then you've got a decent shot. Finance is often forgotten. And I say that from my heart because I'm an accountant as my core training, and it's something that is often missed. So if those are well in hand, then you've got a decent shot.
Yeah, the finance is there for the first 250,000, and they will then be paid that money. So we'll then have revenues of 10 to 12 million. But if it goes as well as is expected, they will need additional financing, and been looking into that as well, I think, to get another between 5 and 10 million for financing that is product finance. So
what's the market cap?
It's about £30 million.
And what's the annual revenue that they're predicting for this?
Next year, or the year, middle of the year to middle of the year, 24 to 25, it'll be £12 million. And the following year, it'll be £36 million.
And do you have any view? Have they given any feel for profitability?
Yeah, the profitability is at 10 to £12 million, around the 36%. Profitability moving up. The scale should be circa 50% plus.
Okay, so you're looking at about £4.5 million of, I presume that's net profit in year one. And then as some of the core costs diminish as a proportion of revenues, you're looking at about £15 million a year thereafter, and potential growth after that. Now, that kind of business, if it has some degree of longevity, which one hope it would do, you're moving into a PE ratio type scenario that could give it a dramatic increase in valuation, subject to where that finance comes from, to help it achieve its objectives in terms of operational day-to-day funding of what they're doing, and also dilution. Now, does it impact it because it's aqueous, or are you finding that trading is relatively liquid in that market?
No, it's trading very, very well, actually.
They've moved from the apex,
from the
7p.
growth. Yeah, it's risen this year from 7p to around the 29p mark. It did a high of 31, but it rose from a very low base in terms of its valuation for the opportunity that it had. But it really is only just beginning. I mean, obviously, we're speaking our own book here because we cover them and we also are invested. But I really think it's one of those. That's why I said to you, what do you think are, as in Charles's words, Charles Archer, it's like moonshots. And I really believe this is a moonshot, but a very, very structured one, because ultimately the deal is only being rolled out in some European jurisdictions. And AS Watson have, I think it's about 4,000 different shops all over Asia and Australia, China and all of those areas, which that first 250,000 order doesn't include. So I think the order could be, in the magnitude of millions within a year, just to cover those shops that they have. And yeah, so I think it's just one of those opportunities. Few people caught up, few people have built positions, but it's not too many as yet.
Well, in fairness, Charles is far more eloquent than me, and clearly had a better education. But that's not really a moonshot for me. A moonshot is something where there's very high risk. But if you get really positive turn of events, like a drill in the ground makes a major discovery, then it's a moonshot. In other companies, perhaps as with this one, it's a point of fundamental undervaluation based on its objectives. So it has a defined plan to generate dramatic revenues and growth going forward on the basis of products. That's different. And that's where you're betting that they will be able to deliver against these fundamental operational objectives. But there's one thing that comes through this, and that's Aquas. Aquas has a pretty poor reputation because of generally low liquidity. But what it's very good at is, in particular specialist areas, actually delivering very high liquidity and very significant returns for investors. Because once it does get trading properly in a particular share, it's as good as or even better than AIM for delivering that big, very rapid increase in share price.
Yeah, agreed, because you also can't short on Aquas as well. So it's a true market, if you like. There's a market that says, if you want to buy it, you buy it. If you want to sell it, you sell it. And that's basically it. The other reason why we think this is a good stock is 116 million shares in issue, and over 70% of those shares either held by management, institutions, or other big companies.
Oh, isn't that funny? A few years ago, many, many years ago, I actually did a study because I have to fill the time with pointless activity. And I looked at, based on the 2009 to 2011 boom market in junior resource companies, what was the optimal number of shares in issue when a company embarked upon its major share price rise? And it was 130 million shares. Now, I don't suppose the market has changed that dramatically. And I think around that level of shares is actually quite a good starting point for a company. So There you go. Maybe you're onto a winner.
No, and I agree with what you're saying as well. I think that it could well be that there will be specific winners in the first 12 months of the market. Then once we get a momentum across the board, then it's going to be a different thing. And I'm interested to do a bit more research on Rock Cruise myself. I think now it looks very interesting. I'm looking forward to doing some more research on Rockfire. I'm interested to see what sort of jurisdiction Greece is, as in being a European Union representative in terms of its mining ability. That would be an interesting part of that equation, I think, because they seem to not want to do anything in their own backyard. Close my answer on that question.
I didn't realise it was a question. It doesn't matter. The jurisdiction, it doesn't matter. This is what, oh God, I used to get so fed up when I was running these bigger companies, like with people saying to me about, man, you'll never develop a mine from that project, so you'll never develop a mine in that country, or you never do. It doesn't matter. The junior exploration company is not about developing mines on the whole. They're about finding vast resources, but someone comes along who actually does have the capability, the influence, and all the rest to take things forward. It's in these early stage opportunities. In reality, the market doesn't really care about where a project is. It doesn't really have a long-term view. It's looking for the next day news. It's all about the story and the capital structure.
Yeah, absolutely.
Okay. On that note, we'll say Paul Johnson, seasoned investor, thanks very much for your time.
Thank you to you. Pleasure to be on.
Cheers, Paul. It's been great to have a chat with you again. And come on again before the year's out, and we'll see whether any of us were right about anything.
Oh, we're going to be right about some of these things. It's coming. It's coming.
It's always good fun to catch up with Paul, isn't it? So, what else has been on the radar, Kev? There was an RNS on Friday from Galileo, wasn't there, regarding Lou and Sobe? What did you make of that?
Yeah, I thought it was good progress. They're obviously moving the project forward in terms of its ability to have two parts as opposed to just the whole Lou and Sobe. So really, maybe an open pit and deeper stuff. Yeah, the market didn't take it good, but I think the market was waiting for them to say, we've sold it for X million. And, I don't think it's going to be as quick as that, but I think this is part of the sales process, to be honest. If you read the RNS strongly, you can see that it's like, we're up for sale. And this is the different scenarios. I haven't spoken to Colin since, but I intend to try and speak to him in the not too distant future. But yeah, I thought it was good, to be honest. And I mean, Lou and Sobe as the market cap of Galileo is, in my views, many times the market cap now. Yeah. So again, as Paul was saying, you got to look for these things that are fundamentally undervalued in terms of the assets that they hold. And I think Galileo is one of those, to be honest. Yeah. Okay. And that's without even talking about the Northwest Zambia and Shingan, which we saw the falls for, obviously. And so strange. I suppose not a strange reaction, because people were invested for, if you like, a quick buck, get in, get out. Yeah. Seems pretty logical that they just got out. Okay. They sort of threw their money away, I think, at 0.85, 0.9, and reported this was sitting at a penny again. So, yeah.
Okay. All right. Well, I think we've talked long enough. I think we'll say, obviously, good luck to Jack Draper in the semi-finals of the US Open. Let's hope he can get through to the finals and win it, in the sort of similar fashion that Emma Raducanu did a couple of years ago. But yeah, I want to obviously just say thanks for listening. If you like what you heard, hit the subscribe icon and also hit the bell icon for any future notifications of any further episodes. Thanks for listening.
Yeah, thanks for listening. And let's hope we get another tennis hero.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.